Hey everyone, Tommy V from 81 Real Estate, where we are helping healthcare workers reach financial freedom through the acquisition and acceleration of real estate. This is going to be the first of many videos where I'm answering your questions, doing things on the whiteboard, and just kind of breaking down how real estate can help you. First thing I want to say is thank you so much for taking the time to watch this video. The next thing is that the core of our community that I am building is going to be on a Discord server. Discord is just a service and a platform where you kind of build a custom chat rooms and communities to be able to connect not just with me, but with each other. Because there's going to be experiences that other people have had that I have not had. And we'll be able to learn from each other, kind of the iron sharpening iron model. So I had a pre-release kind of a soft opening. I invited 25 people to be kind of the guinea pigs and first have access to the server. I'll show you what it kind of looks like right now. All right, so this is what a Discord server looks like. Kind of on the side here, you have different categories. And I made the outline, and we're going to start building out everything under these tabs as time goes on. And it'll kind of offer like a hub. Like if you're most interested in flipping houses, or you're going to want to hang out here in the fix and flip kind of section. If you're someone that's really into wholesaling, you're going to want to hang out here in this section. So I invited 25 people to be exclusive, sneak peek, early access. And this is where the majority of the content and community is going to happen. If this is something you might be interested in, I'm not accepting any more people right now, but I will be opening up later once we put some more content, kind of build it out a little bit. So if you're interested in joining this Discord server, if you think you'd be able to add value or learn from what I'm putting on here, what the rest of the community is doing, below you can comment Discord or shoot me a message, and we'll be sure to build a wait list for people that'll be able to get access to this as time goes on. So to kind of kick off the community and kind of show what I want to do, because I don't want to just be talking about stuff that's important to me, I want to talk about stuff that's important to the community. So we're going to have this questions for Tommy tab. This is always going to be here for as long as we have the server. And so I launched it, and I told folks to put in some questions here. And out of everyone that put questions here, going to have a little raffle, give away a Starbucks gift card or Dunkin', whichever you choose. I'm all about giving back and giving things away. So if you participate, you're going to get rewarded. So I put it in a little random name generator. We had a couple people post here. And our winner is going to be Gum M. So I'll shoot you a DM as the winner for this particular, this first challenge. And it will get you a Starbucks or Dunkin' gift card so you can enjoy. All right, so I'm going to minimize this, and I also post this on the Facebook group, and I got 2 people to shoot me some questions there. No gift card for them. No gift card for them. Here, let me stop the share, but I still want to answer those questions. Let me go ahead and pull up this doc here for questions. All right. So the first question is from Joe Mar. He says that he purchased a second home. Current home was a HELOC refi. Plan to use it as a rental. Any advice on what to do with the profit made from the rental and how much to save? Perfect. So I'll have to get some clarification from Joe Mar because there's a lot of different layers to this question. And of course, all of these are kind of an intro, very brief answers, and we'll kind of expound upon them later to kind of illustrate different principles and how it can help you. What to do from the profit made from the rental and how much to save. So this goes back to kind of how do you calculate your profit and how do you break down how much you should be allocating for insurance, taxes, repairs, and maintenance. So on my real estate spreadsheet, it kind of gives you some guidelines to help you break that down. But generally speaking, if you buy a rental and it's leveraged, you want to be setting aside anywhere from 5 to 10% for maintenance reserve, 5 to 10% for vacancy reserve, 10% for property management. Whether you are or are not using a property manager, you still want to budget that in there. And then you should still be cash flowing a minimum of $100 a month. If you're cash flowing more than that, that's excellent. If you're cash flowing less than that, you might want to look for some opportunities for increasing your rent or lowering some of your other expenses. The best book to talk about how you allocate profit into those different buckets is the book Profit First. Highly recommend you to read that. And we'll break this down later that'll be a very common topic on this channel. Brittany made a question. What's the smallest thing to change that makes the largest difference in selling price? So this has to do with a changing market. The beautiful thing about real estate is that it is highly regional. So what applies to one market does not apply to all markets. So it'll be very dependent on which market you're in. Generally speaking, right now, if you have the medium home price, that's the middle average price for a particular area, and you're staying below that, you're going to have crazy high demand right now because housing affordability is squeezed right now. You want to stay median and below. That's where you're going to have the best luck. So pricing it in that range would be super important. Kind of the second thing when you're listing it is staging. I'm a big fan of staging, and it really helps put bones. It really helps display a picture of a lifestyle and a home and not just a house and a property. Buying a house for a home buyer is an emotional investment and have to see themselves being able to live there. So you can use staging, and staging will either cost 1% of the list price, maybe $2,000 to $3,000. There's a lot of variations, but by doing that, you make it easy for the buyer to see themselves in the house, and that always makes you have a more competitive product. Second one, she said, what's been your favorite project to work on this far? I'd say the most recent flip, not our most recent rental, but the one before, our second most recent rental, was my favorite because it encompassed a lot of aspects of creative real estate investing. So we did creative financing where we took over the payments for the homeowner. We did the entire renovation, and then we did a cash out refinance to get some of our capital back. And now it's a cash flowing rental. I'm going to be breaking that down in a different video, but that was my favorite project so far. All right. Jay Seaforth says that the Denver market is super pricey. What are your thoughts to be creative and house hack? Yes, absolutely. So as a beginning investor, just getting started, house hacking is an excellent way to build equity and cash flow to get you started. What is house hacking? House hacking is where you buy a duplex, triplex, or quad. You live in one, you rent out the others, or you buy one house and have roommates, or you buy a house with a basement and you rent out the basement to get additional income. All of those strategies help build your equity position. It lowers how much you're spending per month on housing and kind of gets you in the game, in the flow of being in the game. So he's right on track with that. We'll come back to that later. How do I get into real estate when I have 2 years of proof of cash for my new Cash PT startup? Great question. So when banks and lenders are looking at real estate investment properties, the way that they calculate that is different than if you were buying a house for yourself to live in. It's more similar to commercial underwriting. And the way it works is that they take the value of the property, they take how much it should rent for based on the market, and they do some calculations, and they build the loan based on those two factors only. They call it a no-doc loan, no document loan. You don't provide your W-2s, you don't provide pay stubs, you don't provide paychecks. None of that matters. All they care about is the value of the property, what it can rent for, and if those numbers work out. Of course, there's stipulations, like usually you can only get a loan up to about 75% of the loan to value ratio. So you have to usually put down a pretty hefty down payment, but that is the easiest workaround for getting into an investment property. What are your thoughts if you're in my position? How do you build a game plan? So like I already said, house hacking is an excellent place to start to get in the game. And then I would say that forming an LLC would probably be your next step. And we'll talk about that more later. Dr. Mackey, how to find deal that will cash flow positively each month? That's a great question. Something we're going to talk about a lot on this channel. The best place to find deals is going to be linking in with wholesalers. Wholesalers market directly to people trying to sell their house, and they sell it directly to an investor without posting it on the MLS. So it won't be on the MLS. It won't be on Zillow. No one can see it except for their email list, their investors that they're connected with. So you want to be connected with those people, and we'll go over that in the future. How to manage rentals and get started with more real estate as a travel PT. This is the exact boat that I was in. We spent the last year traveling, and all of our investments were in Florida, and we were not in Florida. So we had to have a strong relationship with a high quality property management company to facilitate that. I'm going to be making videos about interviewing, selecting, finding property managers and how they can help you and how you can help them. But that's going to be the easiest answer there. Shots on short-term versus long-term rentals. Well, I've alluded to this before. I'm not a huge fan of short-term rentals at this time. And the primary reason is that Jacksonville is not the best market for short-term rentals because you really want a short-term rental to be four seasons attractions. So places like Nashville, Asheville, Austin, where there's a lot going on, 4 seasons, 12 months out of the year. So you have a large draw year round, large demand. So it's something that I'm not in right now. My biggest hesitancy is that because so many people have pushed this, there's been a huge spike. I think it's over 60% increase in the volume of people offering short-term rentals across the nation. And so because we have higher supply, maybe the same amount of demand, or if we're heading towards a recession, we're going to have smaller demand, then I don't feel great about that situation. There's lots of people that do it and are very successful. I'm just not that person. But I will be looking to find someone that can advise and educate all of us to see if that's something we should consider, because that's a great thing about real estate. There's no one size fits all. There's tons of different ways to make money. Goose, how much money do you need to save to put towards a house for investing? How much down? So if you're going to do house hacking where you're going to live in one, rent out the other, like an FHA loan, you can get started with as little as 3.5% down. So you can get in the other units, you get to count that cash flow to help you qualify for the loan. So if you're getting a quad, a 4-unit building, you're going to live in one, well, then you get to count 75% of those 3 other market rents to help you qualify for the loan. And you still only need 3.5% down. That's probably the quickest way to get to really hit the ground running. If you're going to do more conventional, those are like 20% down. There's some physician home loans that physical therapists and other healthcare workers might be eligible for that are 0% down. So it just depends. And we'll talk about funding and lending in more videos. What are some good home characteristics to look for to make a profitable deal? Location, amenities, type of home. Great question. So this is where we are trying to capture the largest number of people that would be interested in our property. So what you have to think is you have to think the most average house in the most average neighborhood at the most average price point is going to have the appeal to the largest group of people. And that's what makes your investment a little bit more safe and is going to keep your vacancy low. So for Jacksonville, Florida, the median rent for our market is $13.84 a month. So if your rental is at that mark or below, you're going to be capturing the largest amount of people. As far as type of home, single family home, 3 bedrooms, 2 bath is the classic home that's going to appeal to the largest number of people, especially people with kids, families, things like that are established. And that's really what you want, is you want people that are established, predictable, and will hopefully stay put for a prolonged amount of time. Number 3, how to manage real estate investment without it being a headache. We'll talk about that more, but making sure you do your numbers correct on the front end so you limit your surprises, lower your risk, getting really a relationship with a property manager. That's what's really going to help us in the long run. Jeep on 35, my fiance and I are looking to buy a house in the coming months. What are the different options of percentage, putting money down? What route would be the best for long-term investment? I briefly touched on that above, but kind of your FHA loans, conventional, and physician loans are going to be your top 3 to consider at this time. It's going to be about 3.5% down, 20% down, or 0% down. But you really got to make sure you can actually afford that payment, because they might approve you for more than you can really afford. So you might need to consider that. How does refinancing work, and would that benefit us as homeowners? So previously, refinancing has been the way to go. The BRRRR method: buy, rehab, refinance, rent out, repeat. The BRRRR method. Unfortunately, when you do a cash out refi, those rates are much higher than the rates that you'll be given to purchase a property. And they almost always come with prepayment penalties. What a prepayment penalty means is that if you pay it off early, you're going to owe a fee, a certain percent of the whole loan for paying that loan off early. And we'll talk about that more when we're talking about funding and lending and things. My fiance owns 2 condos. Is there a way to leverage those to acquire more real estate without going into further debt? The short answer is yes, and it is all about getting creative. One of the easiest ways is you try to find a hard money lender. You find someone that'll lend you $10, $50, $100,000, and you secure it by the equity that you have in those properties. This is what's called preferred equity. It's one of the creative financing things that is really for a more seasoned pro investor, but it can absolutely be used to do that. And we'll talk about that more when we talk about funding and lending. Marcus, what's the biggest mistake I can make when buying a rental? So there's a lot of mistakes you can make when buying a rentals, and that's what I'm here to help people avoid. The biggest mistake you can make is poorly estimating your monthly rent. If you think, hey, I can rent this for $1,500 a month, you buy it, you acquire it, you fix it up, you post it, and nobody comes to rent it. You drop it, $1,300, $1,200, $1,100, and then you rent it for $1,000. Whoo, man, that's 33% lower than you thought you were gonna get. And if your loan is $1,100 a month and you were expecting 15, now you're renting for 1,000, you're going to be upside down in a hurry. So accurately projecting your rent you're going to get is the most important thing when buying a rental. Other things like size, location, schools, selecting the right tenant, all of those are important too. But really, if you mess up your estimated rent, that can really throw the whole thing quickly. Why don't more people with capital invest in real estate? So I think there's kind of two main things with that. One is knowledge. People don't understand real estate. There's a lot of moving parts. It is quite complicated, and it is not for someone to casually enter into. There's a lot of places where you can mess up, and I think people just think, this is too hard, I'm not going to do it. The second thing is that real estate is relatively illiquid, meaning that it's not accessible at any point. Real estate is better designed for kind of the 5-year and longer goal pursuit. That's why people love the stock market, because the stock market is very liquid. You can get your cash out at any time. But kind of the flip side of the coin is that because the stock market is so liquid, it is highly volatile, and you can lose a lot of money very quickly. That's the good thing about real estate, is because it's incredibly not liquid, it's pretty hard to lose money quickly, because it can't be sold right away. There's always a process, and there's steps, and there's protections, and there's things like that. Number 3, how can I best manage the ongoing responsibilities of my rental? We've already addressed that, but having a really good property manager, having really good systems set up, and honestly working in this community and watching these videos and learning what you do and need to not do. Call the closer, not sure if you answer this. How you go about figuring the percent of your rent for business expenses as well as utilities for work from home business job. Okay, so this is about deducting your own home as your place of business for your job, for your LLC. Brandon actually broke this down in a video for Cole, so he might have already gotten that question answered. But basically, if you have, a 1,000 square foot apartment and 1/4 of it, 250 square feet, you have set up with your camera equipment, and that's where you make your content for being an online digital creator, then 25% of your expenses, rent, utilities would qualify as a deduction there. The other thing you can do is you can like rent out your house to your business for 2 weeks out of the year for like a meeting with the officers. I mean, there's a bunch of crazy things, but that's kind of the simplest answer. You just take the percentage of the square footage that you're using and then apply that to the business. M Janice 126, what do you look for when working with a lender? Transparency, good communication, and can they actually close the loan? There's a lot of places that'll just throw you all these things. Oh yeah, we can do this and we can do that. And then you kind of get into the weeds with them, and turns out they can't close the loan. Especially right now, it's getting harder and harder to get funding because of everything going on with the banks and the Fed rate. So you want to look for someone that's been around for a while and really knows what they're doing and has experience working with investors. Investment loans and rental properties are way different than an owner-occupied house. When is it advantageous to buy points to lower your rate? This is a great question. The mortgage broker I've used, Teresa, I'm going to try and see if we can get her on a call to specifically answer this one. The short answer is that it is always changing. When the broker pulls up all the mortgage rates with the different companies and buying down points to change the rates, it is always changing. And there kind of is a sweet spot, and an experienced mortgage broker be able to help you kind of walk through that. But there's kind of a point of diminishing return where it's like, okay, you can spend $5,000 and get your interest rate down 2 points. But if you spend $10,000, we're only going to get it down like 2.2 points. So there's kind of a sweet spot. And an experienced mortgage broker would help you navigate that. The other side is, how long are you going to own the property? If you're going to own it for a long time, then yes, you probably do want to pay down the rate. So that your overall cost on the loan over time is a little bit lower. If you're intending to kind of refinance this loan, or you're buying it and then you're going to sell the property relatively quickly, then you would not want to pay to buy down the points, because you're going to own it for a short amount of time and not pay that much interest anyways. How many lenders do you typically look at before you choose one? So I've kind of, one of the best lenders I found is called Visio. Visio Lending. It's extremely straightforward, no docs. I've had really good luck with them. We've done 3 loans with them, I believe. But it has to be one that's experienced with investors. Gum M, congrats on the gift card. I'll shoot you a DM. What do you use to run the numbers? So I use Excel spreadsheets to kind of do all of these things. And I've kind of custom made them over the past 6 or 7 years to fit exactly what we need and be accurate. I've gone over those in some videos. We'll be using them more in the future as we analyze deals or look at the deals that I have done. And we'll show that. How to use your current home's equity to get another property. So if it's the house that you live in, you can do an owner occupied HELOC to open up basically a credit card against the equity in your house, and then use that to buy a property. We did this with one house. We bought it, fixed it up, and then we opened a HELOC for $180,000 and used that money to purchase and fix another property to get it going until the first one sold. You cannot open it. I have not been able to find a lender that'll let me open a HELOC on a property inside of an LLC. I have not been able to find that. So if you know anyone, let me know. Or you can do a cash out refinance to get some of that equity out. And we'll talk that when I'm kind of breaking down deals. What was your biggest fear investing in real estate? Something that kept you from taking that next step forward? Well, our first deal, we got absolutely fried. We lost $25,000 because we got tricked by a more experienced investor that knew the house was complete trash, and they pawned it off on us. So kind of my biggest fear there was getting taken advantage of again. Luckily, we were able to enroll in a mentoring course to learn how to not do that again. That really motivated us and gave us a much better foundation to move forward. So really the fear of getting taken advantage of as the new guy. And that's something, this community, that I'm very passionate about, helping new people take that first step. Because once you get that first step, move from 0 to 1, it's much easier to go from 1 to 4. We'll get there. Could you talk about what are the key numbers or metrics to run or evaluate what is a good deal that make it a poor deal? So the number one thing is, for long-term rentals, is monthly cash flow. And that leads into cap rate and percent yield. I have some videos on my YouTube channel if you want to click over and look at those. I might leave the links below. But really, how much money are you taking home after tax, after expenses? How much real money are you taking home compared to how much you had to put up to acquire and fix the property? Roughly speaking, a cap rate over 7% is pretty good. A cap rate over 10% is really good. That's the kind of the point there. Really anything cap rate under 7, I would really stay away from, because it gets really, really, really tight to where you have one speed bump and boom, you're underwater. So you want to have a nice cushion, especially for your first one starting out. Pros and cons of long-term versus short-term rental properties for more consistent cash flow. I briefly mentioned this above, but long-term rentals, especially when you have 1 or 2 and you're going to the bank to help qualify for more loans for more properties, a long-term rental is more stable, it's more predictable, and underwriters like it a lot better and are more likely to give you more money because they see that you've been a good steward and are generating consistent cash flow there. Because short-term rentals, the income can fluctuate, be very up and down. It's hard to project over the next 5, 10, 30 years what that's going to look like. So underwriters are a little nervous writing for it. You have to find specific lenders that are familiar with short-term rentals. Again, I already kind of addressed this earlier. Better to buy one multi-unit rental property for $1 million or several single-family homes, 300 to 400,000 for positive cash flow in the Tampa, Florida market. So this is talking about kind of diversifying and spreading out your risk. Personally, so generally multi-unit properties are going to have better cap rates and yield because everything is condensed. If you can hire one property manager to manage those 4 properties, they might give you a discount because they're all in the same place. If you have 2 on the first floor, 2 on the second floor, and 1 roof. Okay, well, now you have 1 roof covering 4 properties. Whereas if you have 4 houses, you have 4 separate roofs. When it comes to maintenance, lawn care, okay, if your tenant's going to take care of all the lawns at your 4 single families, or you've got to help take care of the lawn at all those versus your 1 multi-unit, that's just 1 lawn there. Making things more standardized, a little bit easier kind of in a multi-unit. So if you, the only thing with multi-unit is 1 to 4 is still considered residential. So kind of regular underwriting, conventional FHA, you can do that. If it's 5 and up, that's gonna be commercial underwriting, which is very different. And as a new investor, you're probably not gonna be able to qualify for that anyways. And you're probably gonna have to put 30% or more down on the property. So if you're looking at a multi-unit of $1 million, 30% down, you'd have to have $300,000 to put down to even get started in that property. That's not making repairs, paying anyone. So that'd be pretty tough to qualify for right away, unless you're just sitting on tons of cash. I would probably start out with acquiring 1 single family property, get the hang of it, get it rolling, and then look to grow that over time. And then once you feel good with those, I would sell all those because then you have maybe 1 to 2 years of consistent cash flow on your, tax returns to show, get all those going, sell them. Now you've got your chunk, $300,000. You can go to a commercial and say, hey, look, I had all this consistent cash flow. Now I have this chunk and I want to put it into a multifamily. And you can probably do a 1031 exchange to roll all your profit and not pay any capital gains. That'd probably be my strategy. And that's kind of where we're going to be headed in the next couple of years, is cashing out our single family rentals, getting a chunk and trying to put that into a little bit larger multi-unit property. Better to buy flips and roll profits, or buy and rent, use profits over time to scale. So it depends on how much time you have to put into it. Buying and flipping houses is a full-time job. If you have the risk tolerance, the connections with vendors, and you have very accurate pricing on what your renovation is going to cost and how long it's going to take, then buying flips and then kind of snowballing those into more consistent, predictable, buy and hold for the long time. You can do that. The other thing with flips is because you're buying, fixing, flipping them in a short amount of time, you're going to have a pretty high tax hit for capital gains. If you buy it and hold it for 1 year as a rental and then sell it, you're going to pay a lot less capital gains. So kind of a little bit of both would kind of be the answer there. We'll break that down more. Jillian, can you go over the basics of real estate investing out of state? Yes. So investing out of state, if you live somewhere that's very expensive and the rents just aren't there, then going out of state will be the best option for you. What you want to do is you want to find a property manager in that area, the number 1 property manager that can give you the best data about the best neighborhoods, median price, median rent, what areas to look in, and they might even be able to help connect you to someone where you could buy a property that's already under their management, coming off of a different investor. So that's kind of what I would do there. What is the best way to go about if you live in different state property you are purchasing? So basically what I just covered there, you got to find someone that is an expert in that area. What factors look for investment? So what factors do I look for? You want to look where there is people coming into the area, not a bunch of people leaving. You want to look for where big companies are investing in the area, building factories, building hospitals. Businesses are coming into the area. They're places of growth. There is wage inflation. You want to look for that. And then even places like colleges are a good spot because those people are going to be renting. Hospitals, like I just mentioned, you're going to have travel workers, you have people coming in and out. Those are a little bit more stable, a little bit higher paying jobs. and you want low taxes. So I would try to stay away from any of the states that have state income tax. I would try to stay away from those. Who would you consult with or hire to assist in purchasing out-of-state properties? Hey, that's a great question. So I think that kind of the purpose of this channel and me consulting and coaching, helping people acquire properties, that's exactly what we're going to be here to do. But I think connecting with a knowledgeable, experienced property manager in that target region is going to be the thing that'll help you the most. All right. Well, thank you so much for your time. That was a awesome video with some great questions, and we're going to do this again in the future. Again, if you're interested in the Discord, comment below Discord or shoot me a DM, and we'll get you on the wait list for the next time we open it up to get some more people in, and you can get your questions answered and connect with the community like these awesome people here that are already trying to figure out how can this benefit me and how can I get where I want to be financially.